you recently just published your 2025 outlook. In it, you say the U.S. is attractive, and you also have an upside scenario, kind of a best-case scenario for the U.S., where there's less regulation and lower taxes. So the potential pick as Bessent as Treasury Secretary, does that bolster that view? Does it change it in any way?
It seems that Scott Bessent is a good pick for Treasury here. I mean, we have U.S. 10-year yields coming down to 4% over the next 6 months. We think that's confirming that with the idea that the U.S. budget deficit is not going to run too far away. On top of it, we do think that the U.S. equity market is very well positioned for the year ahead. We have 6,600 for S&P 500 target at the end of the year. We both see inflation rates coming down, but also AI continuing to be sort of a driver of growth in technology stocks, but also the sectors like financials, utilities performing very well in the year 2025, which we call roaring 20s, the next stage.
Yeah, you know, I saw that in your notes. You think it's potentially once again the roaring 20s, kind of alluding to the 1920s, the previous roaring 20s. I want to talk about two of the picks that you made within this note. So one of them, you say you want to sell the dollar and you want to buy gold. We're going to show a chart of both gold and the dollar since Election Day. They're literally moving in opposite directions. Dollar up about 3%, gold down about 3%, roughly right here. What change are you seeing that's going to kind of reverse this trade that we've seen since election?
So first of all, when we look at the US dollar, we certainly recognize that in the short term, it's very, very well supported from a strong US economy, a Fed that might not be cutting as much as some of its counterparts around Europe. But this overvaluation that we're seeing in the dollar and a degree of normalization of Fed funds rate from its current levels is likely to lead the dollar, we think, a little bit weaker against some of the majors. Conversely, when we look at dollar CNY, we predict that to go towards 750. So we do think that some of the tariffs that we heard Scott Bessent talking about before is likely to be negative for the Chinese economy. We're likely to see a bit of a devaluation of dollar, of the Chinese currency. Conversely, on gold, we do think that it's likely to appreciate towards a target of 2,900 at the end of 2025. That's driven by what is still excessive debt levels, lower inflation and rates, but also a need for global investors to diversify out of some of their fiat currencies and generally speaking from a dollar diversification trend.
You also say right now is a really good time for alternatives. So you gave us two different areas where you're looking at alternatives. It's data centers and also multifamily housing. I want to start with data centers first, if you don't mind. How would you play data centers? Would it be through REITs or would it be through an ETF? We're going to show an ETF and a couple of REITs. Equinix is one REIT that's very popular when it comes to the data center space. Those shares up 16% year to date. Digital Realty Trust, another REIT focused on data centers, up over 40%. Then the ETF is lagging. So in your mind, is this more of a single stock story when you want to play these REITs? The data centers, or is it an ETF, or would you do maybe an alternative asset manager like a Blackstone that owns a lot of these? I mean, how would you play it?
So what we're typically looking for is the best asset managers out there. And we do like some of these alternative private marketplace that we have on the shelf. So we definitely go diversified into this investment, but some of the more active managers that we have on the shelf, that's something that we like. Broadly speaking, the reason we like real estate this year is, of course, that we see interest rates coming down, mortgage rates are coming down, and we do tend to like commercial real estate as one of them, and then multifamily homes, that's particularly in the US and Europe. We're shying a little bit away from places like China and the UK.
All right. Last but not least, Mark, really interesting part of this note, you have a commodity pick in here. So your commodity pick is actually copper. I'm looking at the chart on copper. Kind of a wild ride for copper year to date. It's up about 5% year to date. What are you seeing in copper? What's the opportunity there going into next year?
So something that we're talking a lot about, Frank, in this year ahead is power and resources. So with this whole AI trend, we're going to need the demand for electricity is essentially going up quite strongly. So we're looking at that whole value chain essentially. So some of the transition metals, and copper is definitely one of them. We basically predict for demand to double over for the next few years. And we think that's going to create prices that are moving upwards and a continuous bid as we see more electrical vehicles, et cetera. Demand just for some of these GPUs that is rising quite strongly as well here.